Hello traders, welcome back to another Black Swan mini-series. It's myself, SGFX, who's going to be taking you through this series. And we're going to be focusing on supply and demand. So, similar to the structure mini-series, it's going to be a three-part series. And the way we're going to structure it is, first episode, it is going to be an introduction to supply and demand. So if you're already familiar with supply and demand, maybe you won't take as much value from this first installment. But as we progress throughout the installments, we're going to be diving very deep into supply and demand and what it means to be a supply and demand trader. So what does it mean to be a supply and demand trader? As supply and demand traders, what we do is we look for levels of demand or supply in the market and we look to trade from these zones. And why do we trade from these zones? Because if you really think about it, all the market is, any market, it is interaction between buyers and sellers, right? And in the financial markets, looking at charts, we are able to identify key levels where there is active sellers or buyers what are looking to protect these levels in price, yeah? So the first thing we look for when we're looking for a supply or demand zone is a sell before a buy or a buy before a sell that gets engulfed. And what you can do when you see this on your charts is you can mark out the sell or the buy that gets engulfed, yeah? These are your demand and supply zones. So why do we need to see a sell or a buy that is engulfed? Well, it tells us something really, really key, okay, from a transactional point of view. And that is, at this point in price, somebody, our composite operator, brought or sold with aggression. There was nobody else on the other side of the market that could sort of stop price, okay? Whoever was buying here and whoever was selling here was outselling or out buying everybody else at that point in price. And because there's so much volume flooding into the market at this point and so many transactions going through and prices moving aggressively away, what happens is in this zone here, we have orders that are not fulfilled. So what price needs to do at some point in time is return to these zones so the last orders can be mitigated so price can continue. And we know there's orders what are not fulfilled in these zones because what this represents is imbalance here. Yeah, this engulfment is an imbalance in price. And the market is a bit like nature. It likes to keep everything balanced. And if there's an imbalance in price, the market will look to rebalance price. Yeah, so you factor this in with our levels of demand and our levels of supply, and this is how you look for good zones. But this in itself is not enough because if you go in your chart, you'll see this absolutely everywhere. Okay, so this is sort of the backbone of what we need. Yeah, we need a buy or a sell that gets engulfed, but there is a set of other criteria what we also need to look for. And that is the following, yeah. Our zones, it needs to have done something, right? It needs to be a decisional area of price what caused a significant event, yeah. So what we like to look for is extremes of ranges that are unmitigated like this, that broke a previous low or high. Because then we know this was the point in price that decided to break structure. And this is when you integrate your idea of supply and demand with structure. Or if we're not at an extreme of a range, we still need to see a decisional impact from the zone. So it needs to either break or high or a low again, just like our extreme would need to, or it needs to break an internal range within our leg of price. And we'll dive deeper into that as the series progresses. But what else do we need? because these two things are still not enough for us to get key zones. Yeah, we also need to see that there was interaction on the other end of the transactional process. So if we've got a demand zone, what we need to see is interaction with a supply zone. And if we've got a supply zone, what we need to see is some sort of interaction with demand zone. So what might that look like? So say this is a bullish market right here, yeah? And price is coming up nice and bullish. We got a high. We come down into the range. Price creates our internal structure to liquidate buyers and sellers to create liquidity. Then we have a supply zone here that demand interacts with before going to break the high. This is what we mean by interaction. So this diagram isn't the best representation, so we're going to look at the charts in a moment so you get a better idea. Yeah, so it needs to decide something, right? Whether it's an extreme of a range or whether it's higher up in the leg, and it's a point in price what is breaking our internal structure. It needs to interact with the opposite side, so we can see that when buyers entered the market or sellers entered the market at these levels, there was buyers or sellers on the other side that were trying to push back price, but the demand or supply that we're trying to trade from was too strong, too powerful, and was able to move price in their direction. Because then we know these are really powerful points in the market, what are going to be protected by buyers or sellers or the composite operator. Because something we need to really recognize about the composite operator is that they are both a buyer and a seller at the same time. Even if they've got a bullish objective, okay, for a market they're manipulating, they still need to be an active seller to create the liquidity, to create the orders, to imprint structure in the way that they need it to meet their economic objectives, right? And this is really good for us as supply and demand traders, because if we read these points in price accurately, we can be involved on both ends of the moves, right? So what else do we need? So we sort of need to see inducement for our zones, okay? Price can't just break a high, for example, and come crashing back down, yeah? Impulsing back down and just come straight into it. Yeah, I'm not going to want to trade that, really. What we need to see is price to create liquidity above our zones, so we know that the composite operator is building orders, and we need to see that final mitigation of our zone, and then we'll look to trade a change of character. So that's the bare basics. Yeah, we need a buy or a sell that's engulfed. It needs to have done something. Yeah, it needs to interact with the opposite end of, you know, if it's demand, we need to see supply interaction. If it's supply, we need to see demand interaction. And it needs to have liquidity built around the zone. We can't just have zones that are traded straight into, because more than likely that zone then gets swept. And what we're going to do next is we're going to look at some charts, and I'll show you some examples of supply and demand zones. So here we are on EU, and what I'm going to do is I'll run through a buy I took yesterday to show you how I use supply and demand within the context that I just described to you guys with our diagram. So what's happening on EU here? If you're going to 4H, we just took a swing low, okay? This point in price is where the 4H realigned with daily structure. Yeah, so we take a low, meaning we can trade a pullback, yeah? If we get the right confirmations. So we go down to 1H quickly. We can see we've got our change of character here. So, and then we get our demand zone. So what is happening here, and also why does that not look like anything I just showed you guys? So these wicks, the way these wicks are formed is something we call sell to buy or buy to sell wicks. It's very much the same theory of, what we look for in a supply and demand zone. All it is a different way to illustrate a zone. Because if we go down to a lower time frame, within this range of price, there's going to be demand zones. And as we can see on the 15M, we have our demand zone right here. What meets the sort of criteria what I laid out. But what we need to be aware of is that there is demand ranges and supply ranges what are implemented alongside our zones. And we'll get more into that in future installments. But for now, we just focus on this 1H demand zone, or sell to buy wick, yeah? And what I've done here is I've sort of laid out a Wyckoff schematic. Obviously, the series is not based on teaching Wyckoff, but if you saw our latest Instagram post, you see we've done a Wyckoff versus Chalk infographic. And so when we talk about change of character being a Wyckoff methodology, basically by change of character, what we're looking for is the spring or UTAD of a schematic to complete our schematic. So here we have on the 15M a change of character, and we have our area of demand. Yeah, so does it decide something? Yes, because this area decided to give us our change of character. Yeah, it also decided to break this high here. Yeah, it's a decisional area and price. And it's got imbalance here, and we've got our zone. So we can expect price to come release the orders here. Does it have interaction? Yeah, it does. Because the interaction, as you can see, is here. So what happened here? Price traded down. We're going to ignore what happened left for now. All we're focused on is current structure, yeah? Price traded down. We get our spring, we get a V-shaped recovery. We'll talk more about them as well in the confirmation series. And then price comes into supply. And we can see there is a struggle, yeah? And this is what we mean by interaction. We need a zone to be part of a move or be directly involved in clashing with the other side. And we can see we trade in, there's some resistance, and eventually demand or buyers buy through this zone and sellers lose control of this market, yeah? So that's great. So I need to see some liquidity built above this area. And we get that here. So as we can see, price trades back into the range. And you've probably got people FOMO buying, thinking this is going to be the counter trend play. And everyone's going to get involved here. But this, you could say this inducement of this zone, this liquidity build-up, is our substructure, what we spoke about in the structure mini-series. So that's great. That gets run. Okay, so we're taking our liquidity, we come into our 1H demand zone, and we come to fill those last orders. And we come out. And at this point, this is where you need to play the part of a detective. Because the way I trade, and so it's perfectly valid for you to want to do this, yeah? You could do this, and you can target high, right? Because it is likely that we've changed character, we've got impulsive price action going bullish, we've got corrective movement back into our zone. This is an area where demand took control over supply, so demand is becoming more dominant for now, okay? And you could do something like this. But that's not the way I like to trade. I like to refine down and look for a chain of orders, a chain of demand, a chain of supply, and have a precision entry so I can refine my stop loss down a little bit and maximize my RR capability. So in terms of the entry criteria for this is what you could do, okay? What I'm going to show you next is a little bit more advanced, and we'll cover how to do this in more detail in the future installments, how we can look at refinements, and so on. But I just wanted to show you this sort of application of the theory we just covered, yeah? And this is what you need to look for, right? And as you can see, if you were to just enter like this, you get yourself a nice 1 to 2. And, you know, there's nothing wrong with that. That's good. That is good. But if you want to trade more refined and really, you know, utilize the opportunities what the market is giving you, you need to be exploring the detail. You need to be getting deep into the detail. So I saw this 1H demand zone, saw our little liquidity build up here. So I go down to the 5M at this point, and I want to know what's happening on the 5M when we come into mitigate this demand range. And what do we get? We get instant V-shaped recovery. So to me, that's telling me the composite operator has filled their last buy orders and are ready to go bullish, which is great. And as you can see, we get this sort of zone, what is engulfed, and we're starting to get something called a demand chain. And we'll cover chains in more detail in future installments. So great. We've got a mitigation, demand zones being respected, we're getting a demand chain put into this market, we've got trend line of liquidity right here, we're impulsive, we're corrective back down. This is everything I want to see when I want to take a trade, yeah? So now I'm going down to 1M. So what do I want to see here? So as we can see, we have a range of supply here. So I want to see demand really commit to taking control of this market. So as you can see, as we trade into the zone here, I want to see this fail. I want to see that fail. And then I'll look to find a key area. I can follow the chain of orders and look for a fractal entry. So as we can see, we come to mitigate our 5M demand. And then we get a V-shaped recovery on the 1M. And this is the power of fractal markets. So hopefully you've watched the structure series and you've watched the content about the markets being fractal. This is the power of it, because you can take your higher time frames and then repeat the process down and down and down to the lower time frames and take full advantage of these concepts. So that's great. We mitigate the 5M demand here. And what do we see? We see supply fail. Fantastic. So right now, I'm looking for the move that failed. What that made supply fail. Yeah. What is price likely to come mitigate? Where is the last few orders left in this market? And that will be in this zone here. And you're probably wondering, well, there's no imbalance here. What's going on? You said we needed imbalance for our zones, and this is where you need to think, right? Okay, so this move in price made supply fail. We took over supply here. We've got trendline liquidity built up, and we've got equal highs. Yeah, liquidity's been engineered. What the composite operator is needing to do is tempt both sellers and buyers into this market, right? So what will happen, because this did have imbalance here, yeah. Okay, so that was perfectly valid, right? Then we came to mitigate. But what can happen with our zones is they can have multiple mitigations. So what you sort of want to do for best practice is look for a full mitigation at around the 50% level of our zones. So as you can see, on our first mitigation, the 50% level is still left unchecked. So we can be like, right, this is part of a chain, yeah. Our equal highs are about to be put into the market here. So I said to myself, if price comes back down here, that's the entry setup for me confirmed. And when we come down to this point in price, I will look for a 5S change character, because I know this point is flip supply. It's giving me the liquidity that supports my structural idea of a counter trend play. Demand is stacking up, and we're mitigating from a point in price that caused our change of character on the 15M, gave us a big demand range that's been respected, multiple V-shaped recoveries. So I'm going to let price trade back down. And when it does, I'll drop to 5S. And I'll wait for my entry setup to present itself. So at the moment, I'm using a 1.5 pip stop loss, simply because I'm trading on funded accounts, and it's easier with the spread that they give you. So we come in. And when the change of character here completed, which was right here, I was in like this, and I took most of the volume off at the high. Around here, took most of the volume off, and yeah, that's how I use supply and demand. Obviously, there's some slightly more advanced bits there, what we'll get into, but for now we were just covering the basics. Yeah, so I hope you enjoyed this first installment of our supply and demand mini series. If you want to learn more about this before the rest of the series starts to come out, please come join our Telegram. And we also have a public Discord now, what you can join, what's bridged to our Telegram. And yeah, make sure to follow us on Instagram. Thanks for watching. Peace.